Well, Tesla shares have popped, laying out a runway for Mag 7 stocks next week. I'm Jessica Amir. Welcome to the Daily. I'm a market strategist with Moomoo. Well, the US benchmark index, the S&P 500, is up for the first time in 4 days. The Nasdaq 100 up 0.8%. It was thanks to better than expected US corporate news, plus US economic data, and Japan said they're not going to hike interest rates next week. Phew! Good news. So bond yields behaved, falling from 3-month highs. The US dollar fell, and as did the market's fear gauge, while oil dropped and gold held at record all-time highs. But let's get to Tesla. Tesla shares revved up 22%. That's their biggest one-day gain since May 2013, and it spurred a rally in the Magnificent Seven stocks, which hit 3-month highs, mind you. For investors, Tesla's results and bullish outlook, yes, it did lay out a runway for potential earnings beats from the Mag 7 cohort that report. And if Tesla's and Netflix's results are something to go by, then you might be expecting cracking report cards and rallies from Google, Apple, Meta, and Microsoft when they report next week. Now, given these are some of the most influential companies in the stock market, when they rise, they usually take the market higher. But if they disappoint, things could get ugly very quickly, and the market might pull back, especially as margin loans in share trading accounts are at a record all-time high. However, if the market does pull back, you might expect dips to be bought, especially as there's now a record amount of cash and money market funds on the sidelines, standing at $6.5 trillion US dollars. It's just outstanding. As for what to watch today, firstly, let's touch on the big picture. It seems the Aussie share market will have a risk-on rally, focusing on tech and interest rate sensitive stocks. Not only because tech stocks rose overnight on Wall Street, but because Australian bond yields have fallen from their 5-month highs. That's relief. This suggests traders believe Australia's economy can continue to grow without the need of RBA rate cuts. Yesterday's services sector data showed that there's plenty of strength coming from Australia's services, which is critical to our economy. It accounts for 70% of GDP. As for stocks to watch, all eyes are on WiseTech Global. Their shares are really important because they're one of Australia's biggest tech companies, and they dropped 28% in 20 days. Will investors buy the dip? I suspect many will, and that's because almost 90% of WiseTech's revenue is under contract with the world's biggest freight companies. This morning, Citigroup, Goldman Sachs, and RBC all upgraded WiseTech as a buy stock. Another positive catalyst for WiseTech came overnight from UPS. UPS is one of their key clients. UPS reported better than expected sales and profits for the first time in 2 years. And I guess this really highlights the strength in the cargo sector is returning. But before we let you go, if you're into tech stocks, do stick around and join us next week on Wednesday. We'll be bringing you a special webinar previewing the big tech stocks and what you can expect from their results. And that's the Daily.